Alright guys, this is Dividend Doggo coming back at you with another video here on YouTube. We're looking at the portfolio for the week. What was this, ending the 15th of April? I cannot believe we're already over halfway done with April, and that is just absolutely wild. Actually, it's the 16th. That's how fast the days are flying on me. So the end of the week, this week, the portfolio ended up way higher than I thought it would be at the end of the week. So the market gains came in at $7,986, so right under $8,000. We did have $1,361 come in dividends, which is absolutely incredible. That brings our 1 week gain up to $93.47 and 86 cents, which is pretty wild. That's just a staggering amount of money to come in 1 week, and those dividends, I believe, get paid out at the end of the month this month. So they'll be rolling right back into the portfolio. I did some buys. You can see there was a net cash flow in there of $2,031.66. I do believe there was another sign up with the M1 promotion. So someone who clicked on the video and clicked on the link in the description, they got $30 for signing up on M1 Finance, and I got $30 for them signing up on M1 Finance, which is absolutely incredible. I hope they get off to a great start with their investing journey. Getting, technically 30% return on your $100 down is absolutely incredible way to start your investing career. So yeah, what was going on here? The week was quite strong. I don't know what I'm doing with clicks here. I'm going to open up another tab, but I did want to go in and show just kind of how things ended up. VST was up pretty significantly here. We're going to dive straight into utilities. VST came up about $1,800 for this week. All the utilities were green all across the board. The winner really being NEE by percentage, that is. So that is an absolutely fantastic week. Healthcare was up. AbbVie, significant portion of my healthcare slice. I am going to add to J&J, especially if it drops down a little bit more due to all the vaccine news. I think that it's just a quality stock to hold for 30, 40 years. I don't think it's gone anywhere. It's easy to buy, easy to sleep on. Once you've got it, you can just hold it for life and not have to really worry about it. They do have little hiccups like every company does, and sometimes those represent as buying opportunities. So jump into consumer. You can see, if you've been watching the past few videos, there's a new position in this slice here that I didn't have last week, and that is Lowe's. I went ahead and did some dive into Lowe's compared to Home Depot, and over the long run, they've actually been beating them out, and they're significantly cheaper than Home Depot right now as far as the return goes on the money. If they continue on the path that they're on and keep upgrading, this will be a quality stock to hold for quite some time. But I did also increase my Home Depot position by about $1,000, which is bringing that up to 10,000. That's my share price on that was increased by buying it at these high prices, but I'm still comfortable with this. I am totally fine with holding this in my portfolio for the next, I don't know, forever, 30, 40 years, possibly more if I live, into my 70s and 80s. This is just a high quality stock. It's consistently gone up. It consistently raises its dividend at a high rate. It's trading at about the average of the S&P, but it definitely is a performer all the way around. So I'm happy to build this position up to $10,000 in my portfolio. So that is bringing that up to the point that I'm good on that. I'm going to start raising up a couple other positions. I am going to add a new one to the positions probably next week, maybe the week after. You'll have to stick around and check out the future videos. Like, comment, subscribe, get that sweet info if you turn on the notification bell on when I go live for new videos. There will be a new position that I add, and it's a quality position. I don't know why I'm not invested in it right now, other than the fact that it doesn't pay a dividend yield. That's your tease for the week. So buying into Lowe's, I didn't have a strong feeling toward buying into Lowe's. I don't really shop there. I just looked at the analysis of the stock, and they pay a very low dividend, but they are growing it, and they are appreciating in their share prices significantly. So I started out with about 5 shares. I may add to this periodically, somewhere around 5 shares every time. I'm going to try to continue to raise this up, probably to about the same point as Home Depot, and bring it up to about $10,000 in the portfolio. I do want to add to Target as well. I'm going to bring that up, and I'm probably going to try to bring up Costco over the course of the rest of the year. I'm going to try to raise each of these up to about $10,000. Pepsi, I'm going to kind of leave alone, and Coca-Cola, I'm very happy with where that position is at. You can see, just going to the overall here, you can see that they performed very well. Home Depot was up significantly. Coca-Cola is doing very well. Altria is just gone to the moon. These guys pay such a high dividend. I don't know that I can convince myself to keep buying the stock in the 50s, because I was buying it in the 30s, and it's kind of hard for me to justify buying more of the stock. Everyone says that, it's a dead business. It's not. They're clearly doing very well on getting sales out there, and they're bringing money in, and they're continuing to pay their shareholders. So it's hard to argue with simple facts and the green. The industrials, I don't even know what to say about CIX. They overtook 3M as the largest position in my industrials pie. I started this position out, and I rose it up to about, 15K, I think I put in here. 16,400 is my cost on this, and it's up to 26 grand in, I initiated this position in March. So March 11th, and I mean, it's literally been barely over a month and a week, and this position has gone up so much. It is absolutely wild. They were down a little bit closing out the week, but it's hard not to look at this and just be absolutely shocked that it's almost 10,000 in gains. Incredible. 3M is just it's a buy and hold stock for life for me. I'm gonna add more to Lockheed Martin in the future, and likely Cat. I wish I had put more in Cat, as they have kind of taken off since I purchased them. I bought them at like 128.98, so 129 a share basically. I put $2 grand in, and the stock is almost $4,000. I wish I had put more in here. They are overvalued right now, which is why I'm not adding to them anytime soon. I'm keeping them on the radar for if they have a major dip for some reason. I don't know. I'm just gonna watch it and see if I can get this somewhat cheaper than I'm not paying $233 for this stock. I just don't think it's got the potential to raise too much higher. It will raise higher over time. It will not raise higher quickly. I also don't think they're going to raise their dividend too much. I might eat those words, and I hope I eat those words. I'll take that to the bark box. Raytheon was a split apart. I kept this just to hold on to it. It has performed decently, but obviously nowhere near what Cat, Lockheed Martin, even 3M has. I'm just going to keep that position for now. I might eventually sell that, actually. I don't know that it's got the capability to perform too much higher than where it's at in the short term. It will obviously, all stocks will go up over time if they're a decent company that's making good money. Going into AT&T ended the week up 2,000. That's just incredible. I'm really happy to see that. My overall position, you can see that it's still in the red, but the dividends are keeping the stock overall in the green right now. And I've held them since the beginning. You can see August 6th, I immediately bought in $756. And my share cost price is $30.48, which you can still beat me out if you were to buy it today at $29.95. I believe their dividend raise is going to be maybe a penny if we're lucky. I don't think it's going to be much for the next few years, but we'll see. They've got potential to come back with the streaming service for HBO Max going live, and it was a really rocky start, y'all. I had it the first month. I don't want to call it hot trash, but it was hot trash. They have since improved it quite a bit. We currently have it right now because of Wonder Woman, Godzilla, all of the hit movies that were coming out over the next few months. I'm really looking forward to Mortal Kombat next week. I was a big fan of that series, both the video game and the movies. They're just fun movies to watch. Senseless violence and saving the entire planet. Just a fun concept to go and enjoy and turn your brain off from the world stress. The real estate pie had a little bit, this is all time, let's go to 1 week. So had a little bit of a green week here. ABR leading the charge there. LTC is kind of my laggard one. I don't know if I'm going to keep this position. There's not a whole lot in it to begin with. I liked them when I bought them, but they just haven't really done that much overall. They're just kind of teetering. You can see the all-time on that. It's still in the red, even though I've been collecting dividends. It's just not performed that great. And honestly, everyone raves about, oh, I know that there's a chance they'll come back and be stronger as we get through this global pandemic. But man, you can still buy them at what I consider a relatively decent price for a monthly paying stock that, gives you a pretty decent yield. I do hold O in the tax advantaged account and store capital. So I have a significant portion more in store capital in that account than I do O. However, I do hold these in the taxable brokerage as well. ABR has just trucked along, kept doing its thing. I don't think it's necessarily a great value right now at 16, but you can see when I bought it, it was $11.40, so it is significantly appreciated. This is another one that I keep my radar on. If you're looking for something that you want to add a beautiful 7% yield into your portfolio and you're looking for a REIT, take a glance at it. It's worth the gander, just not at this price. Look for this somewhere around 13, 14. If for some reason it dips, that one's a radar stock. I will add more to this position in a heartbeat if it drops down. Looking for those dips. That's just one of those that I would recommend. It makes a very well-rounded REIT portfolio. There is a little bit of overlap between it and I believe O. There might be, I would have to double check on that. I think there's overlap between that or either store capital, one of the two, but it's not a large percentage overlap, so I'm not too worried about it. Then we've got energy. Energy had a green week. Like VLO is fighting back. This stock, it was in the deep red for me for quite a while. When I bought the stock at 61, it dropped immediately down to like 40 something. And I was like, did I look at this wrong? And did I screw up the numbers? Nope, it's just the oil, Saudi Arabia, Russia thing. With everyone going back to work for the most part, the stock has performed quite well coming back up. And I don't expect high dividend raises out of this company, but they're a solid company to hold if you're looking for an... All right, so here we go. We are going back in. We were just looking at energy, and EPD is just kind of hovering. It's kind of rolling flat right now. S&P, the China Petrol and Chemical Company, they definitely led the charge this week with that 5% increase. I don't hold a lot in this stock. I will likely trade out of it at some point and trade into Chevron more. I like Chevron and VLO a lot. Those are two relatively solid picks if you're looking for an oil company to sink your money into for a little while. I know a lot of people that are into clean energy, and there's still good money to be made in oil. It's not going anywhere for quite some time. So that's just kind of how I feel on it. Monthly dividend stocks, they had a pretty solid 1 week. PIMCO Dynamic Income Fund, that has kind of stayed a little bit flat. I'm still slightly in the red on this stock, but it does pay a relatively high yield. So it has a high expense ratio though, so you should know that if you're investing in this. I likely would not invest in this company again if I was to do things over. As you can see, I'm still barely in the red with the market gains. The dividends rolling in have been solid, and this is one I'll probably just leave it alone. I don't think I'll trade out of it. I'll probably just leave it where it is and just collect the extra monthly income off of this. I do like receiving that, like, what is it, about $40 a month. In fact, we can go look in just a moment and see what this one's yielding total to the portfolio, but I've been rolling those dividends into other stocks. The one that I regret not investing more into was BST. BST was a much better choice, much lower expense ratio, lower yield, but significantly higher overall gains. If you look at it over time, it's got this is wild. It's almost $60 and I got it at 36, so it's almost doubled its price. So it's got much higher capital gains, lower dividend yield, but it is one of those beautiful monthly plays. Again, the expense ratio is high on these monthly paying dividend stocks, and that's why you don't see a whole lot of my money in them. Stag is just a beast. If you want to own the Amazon warehouses, this is your company. This is your boy Stag. Stag is a pretty solid monthly paying dividend stock. You can see over time it's gotten a pretty decent market gain and dividend yield, being at 4%. It is pricey where it's at in the 35 range. I don't know that I would sink a whole lot more money into this. But that is what I have in my portfolio right now. And as you can see, we were touching base on the 570 mark this week. It fluttered around there and then dipped down a little bit the end of Friday, but I'm very pleased to see this number going up, consistently seeing more dividends come into the portfolio. That is the dream right there, is to just get the dividends rolling in. Currently, I was going to show you the dividends that rolled in for PIMCO. Yeah, PIMCO came in on April 1st. It was $37.46. So it's a pretty solid little chunk of money to be rolling into the portfolio every month to add into buying something else. Overall, we have deposits rolling in. I moved money over into M1 Spend. I'm now using that to get the extra 1% from their checking account. They pay 1% interest holding that in your checking account. I'm going to transfer significant amounts of money over into the checking account to leave in M1 Spend, and then I'll just be doing my buys out of it. As you can see, I've been chunking away money slowly. I say slowly, but it's not slowly. Most people can't chunk away $3,000 a month. I'm trying to do as much as I can, as quick as I can, to get on the fire movement train and get the income ball rolling here and get this snowballing into a portfolio that is going to take care of me and my wife for the rest of our retirement. Hopefully the goal is to retire early with about 80K in dividends a year rolling in. I would like to get to about 100, but anywhere between 80 and 100K is the sweet spot for tax reasons. If you don't know much about that, you should dive into some financial podcasts, like some blogs like Mr. Money Mustache. Things like that will help you kind of get a guideline for what do you want in retirement, what do you need, what type of fire are you going to go with. I want a fat fire, which means that we have an abundance in monthly income to be able to also invest as well as live off of that monthly income. And that is why dividends should be absolutely for everyone. You should have some amount of dividends rolling in so that you're not worried about taking money out of your portfolio if the market is going down. You've always got some consistent cash flow. When there's, the 2008, the tech bubble crash, 2001, when the pandemic hits and stocks go down, that's not when you want to be looking at selling stocks if you have to sell them. So having consistent income might float you through whatever that is to get you from these, big dips till you're riding high and you can consider selling if you need to. But hopefully the goal is to never have to sell by earning those dividends. I hope that you've enjoyed this look into my portfolio. It is very revealing to kind of show this, live on YouTube. This is a real portfolio. This is where I have my money allocated. This is by no means where you should go and buy right now. The prices that I bought a lot of these stocks at have dramatically changed over the past year. None of this is investment advice. It's just a perspective, a view into my plan and my portfolio, and I hope that you enjoyed it. If you did stick with this for this long, let me know in the comments if there's something specific that you want to know about, or why I did things the way that I did, or want to know why I hold a stock. Let me know if you have questions, and I will do my best to answer them. And the promotion is definitely going on for M1 Finance right now. That is a phenomenal deal, even if you just throw $100 in there for a couple months and collect your $30, and then you duck out in 3 or 4 months. Do it, take the money and run. Try out the platform. It's worked very well for me, and I will likely have it for quite some time. Thank you very much again for watching, and as always, if you enjoyed this, give me a like, a comment, and subscribe, and I will talk to you very soon for another video on investing.